Welcome back to another edition of Market Brief After Hours. It is Wednesday, and after a roaring start to 2026, it feels like Wall Street finally decided to tap the brakes. We saw records hit intraday, but by the closing bell, the mood had shifted significantly.
That's exactly right. It was a classic good news, bad news sort of day. We had momentum early on, but fresh policy headlines, specifically coming from the White House, and some profit-taking really sapped the energy out of the room. The market is realizing that while the year started with a bang, valuations are high and political risks are very real.
Let's get straight into the numbers, because it wasn't a sea of red, but the big indices definitely took a hit. How did we finish?
So looking at the major U.S. indices, the Dow Jones Industrial Average took the brunt of the damage. It slid sharply after failing to hold those record levels, dropping 466 points. That's a decline of 0.94%, closing at 48,996. It actually touched a fresh all-time high earlier in the session, which makes that close sting a bit more.
And the S&P 500?
Similar story there. The S&P 500 pulled back 0.34%, finishing at 6,921. It also retreated from intraday record territory. The drag there was really concentrated in financials and energy, which we'll discuss in a moment.
But the Nasdaq managed to stay afloat?
Barely, but yes. The Nasdaq Composite edged higher by 0.16%, closing at 23,584. But don't let that green number fool you. The gains were very narrow. Chip makers and data storage stocks were actually under pressure. It was a very selective day for tech.
You mentioned financials and energy dragging things down, but there was a specific sector that got hammered due to comments from President Trump, the defense sector. What happened there?
This was the big headline risk manifesting. Defense stocks sold off hard after President Trump stated he would not permit dividends or share buybacks until these companies address his specific complaints about the industry. The market hates uncertainty, and it hates threats to capital returns even more. Northrop Grumman fell more than 5%. Lockheed Martin dropped over 4%, and we saw declines across the board for General Dynamics and RTX as well.
That is a massive policy signal to digest. And it wasn't just defense. Energy took a hit because of policy rhetoric too, right?
Correct. Oil prices extended their losses. The catalyst here was President Trump indicating a deal to import up to 50 million barrels of Venezuelan crude. That is a huge supply injection for the world's largest oil consumer.
And the market reacted immediately.
Immediately. Brent crude fell 0.61% to settle at $60.33 a barrel, and U.S. West Texas Intermediate slid 1.42% to $56.32. We're seeing expectations of ample global supply this year, and despite a surprise drop in U.S. crude stocks of 3.8 million barrels, the gasoline inventory build was massive, 7.7 million barrels. That demand signal is a bit worrying.
Let's hop across the Atlantic. It seemed like a mixed bag for European markets.
Mixed is the perfect word. The Pan-European Stock 600 edged down 0.11%. There are some jitters over there regarding Trump's potential intentions regarding Greenland, believe it or not. The UK's FTSE 100 fell 0.74%. However, the standout was Germany.
Germany bucked the trend?
They did. Frankfurt's DAX rallied, finishing about 0.9% firmer to hit a new record high of 25,099. They had some decent data. Unemployment rose less than expected. Meanwhile, the Swiss SMI slipped just slightly to 13,324.
And moving over to Asia, we saw some serious divergence there as well.
We did. Japan struggled. The Nikkei 225 slid 1.06%, despite hitting records earlier in the week. But South Korea was on fire. The Kospi surged 0.57% to a record 4,551. That's the first time it's broken the 4,500 mark.
Was there a specific driver for Korea?
Tech and large caps were bought up by retail and institutional investors. But the fun story there is Hyundai Motors. They soared nearly 14%, specifically 13.8%, after announcing they plan to deploy humanoid robots at their U.S. factories by 2028.
The future is here, apparently. Before we get to the technicals and Forex, we need to touch on the economic data back home. We had some jobs numbers that likely influenced the bond market.
We did. It was a bad news is good news situation for yields. The ADP private payrolls showed only 41,000 jobs added in December, which undershot forecasts. On top of that, job openings fell to 7.15 million in November, the lowest level since September 2024.
So the labor market is cooling.
It is. And as a result, Treasury yields fell. The 10-year yield dropped more than 3 basis points to 4.142%, and the 2-year eased to 3.469%. The market is pricing a softer economy, which usually helps stocks, but today the policy noise was just too loud.
We're going to take a quick break. When we come back, we are going to dive deep into the Forex markets. I want to hear about those moving averages. And we'll look at the specific stocks that made big moves today, including a massive buyout rumor. Stay with us. Welcome back to Market Brief After Hours. We've covered the big indices and the macro picture. Now, let's get technical. The currency markets were active today. Let's start with the euro against the dollar.
The Euro-USD pair is struggling to hold momentum. It closed at 1.1680, down just a fraction, 0.08%. It tried to break above 1.1700 but failed.
What are the technical levels telling us?
It's in a consolidation phase. Crucially, the price remains above all key moving averages. The 50-day SMA is at 1.1641, the 100-day is at 1.1664, and the 200-day is down at 1.1559. As long as it stays above that 50-day line at 1.1641, the broader recovery is intact. But if it breaks that, we could see a slide toward the 200-day.
What about the British pound, GBP USD?
The pound retreated. It closed down 0.28% at 1.3464. It keeps hitting a brick wall at the 1.3550 resistance zone. It just can't break through.
And the moving average is there.
Still constructive. The price is well above the 50-day SMA at 1.3283. The 100-day is at 1.3370, and the 200-day at 1.3383. So the medium-term trend is up, but it needs to clear 1.3550 to really run. Support is right here at 1.3461.
Let's look at the Canadian dollar. USD CAD recovered a bit today.
It did. It closed up 0.28% at 1.3853. This was a technical bounce. It reclaimed the 200-day SMA, which sits at 1.3848. That was a key defense by the bulls. However, the upside looks capped. You have the 100-day SMA at 1.3902 and the 50-day at 1.3911 acting as a ceiling. It's technically fragile until it clears those.
And finally, the yen, USD JPY.
The yen pair is holding firm. It closed at 156.78, up 0.12%. It's consolidating near highs. The bullish trend is very strong here. It's comfortably above the 50-day SMA at 155.48. The 100-day is way down at 152.24, and the 200-day is at 148.85. The alignment of those averages supports the uptrend. Resistance is at 156.81, basically where we closed.
Moving from currencies to commodities, specifically precious metals, we saw gold pull back from records.
Yes, gold closed at $4,452, down nearly 1%. It's a corrective phase, but look at the support levels. The 50-day SMA is at $4,199. We are still miles above that. The 200-day is all the way down at $3,634. So the long-term trend is fine, but short-term, it's cooling off.
Silver seemed to have a wilder day.
Silver was incredibly volatile. It closed down 3.65% at $78.20. It swung from a high of almost $83 down to $76. That is a massive range. It's still above its 50-day SMA of $58.89, so the trend is safe. But if you're trading silver, you need a strong stomach right now.
Let's wrap up with the market movers. We already mentioned the defense giants and Hyundai. Who else was making headlines?
On the downside, we had Apogee Enterprises. They tumbled more than 13%. They cut their full-year adjusted EPS forecast to a range of $3.40 to $3.50. The market was expecting more, and they punished the stock for it.
And there was a downgrade that hurt a space stock.
AST Space Mobile. They dropped over 11%. Scotiabank downgraded them to underperform and slapped a price target of $45.60 on them. Analyst downgrades in this environment are hitting hard.
But it wasn't all bad news. We had some massive surges in the biotech space.
Huge moves. Monte Rosa Therapeutics jumped over 45%. They reported positive interim data from a phase 1 study for a cardiovascular treatment. That's a huge win for them.
And the biggest rumor of the day?
Ventyx Biosciences. They rallied more than 37%. The Wall Street Journal reported that Eli Lilly is in advanced talks to acquire them for over $1 billion. Whenever you hear Eli Lilly and acquisition in the same sentence, the stock is going to fly.
Absolutely. So, looking at the big picture to close us out, we had a strong start to 2026, but today was a pause.
Exactly. It's a pause. Investors are showing less tolerance for stretched valuations. We have policy signals from the White House, geopolitical risks in Venezuela and Greenland, and softer labor data. The market is shifting from buy everything momentum to a more measured, data-sensitive tone. We are heading deeper into January, and I think volatility is back on the menu.
A data-sensitive tone indeed. We'll be here to track every number as it comes in. That wraps up our coverage for today. If you find this useful, please follow Market Brief after hours. We'll see you next time.